So you want to be a property investor, but what do you actually need to get a buy-to-let mortgage? The first thing to understand is what it's actually for. A buy-to-let mortgage in the UK is specifically for the purpose of purchasing a house or a flat, i.e. it can't be used for land, forestry, commercial, a pub, an office. It must be used for that specific purpose. A big thing to consider before jumping in is, can you actually take on and assume the risk? It's not all sunshine and roses investing in a buy-to-let property. You might have to contest with a tenant deciding not to pay, maybe causing damage, and the long-term impact of owning property and the risks associated as well. Make sure before you start going on this venture that you're truly understanding what property investment is about. Watch some more videos on this channel, because actually if you're going to get started, you want to build that momentum because it's costly to get out. So make sure you want to get in and stay within property as a long-term investment. Next thing to consider is your credit score. Now, the credit score is actually a bit of a marketing fix. There's no such thing as a credit score as such. If you look on Experian or Credit Expert, whatever it is that you use, it produces a score as an indication to you to have a good understanding or a rough understanding of how lendable you are to lenders out there when you're borrowing money from them. Why is it important in the first place? Well, it's an indication to lenders or mortgage providers, for the purpose of this video, about how lendable you are as an individual. Now, this is going to be based on your track record, your age, home ownership, and things like that. But really, you can look at that to make sure you've got no CCJs, court county judgments against you, and also to make sure that you're not borrowing too much. As an example of this, let's say you've got a credit card and it's a £10,000 credit limit. If you're using £9,800 of that £10,000 credit limit, that's an indication to a lender that actually maybe you're at your limit already, because if you're needing to utilize everything that's available to you, then that makes you a bit of a higher risk. Of course, you can game the system by paying down that credit card. And as long as at the point of the search, when they're giving you a mortgage, you're lending less than, say, 30 to 40%, that's going to put you at good standing for purchasing a property. What about earnings? Now, a lot of people, they come on as mentees or people that have gone on other training courses, and I don't know why they're not told this, but they want to quit their job to then go jump into property. Now, this is okay if you've already got buy-to-let experience, maybe you've already got some cash flow in property, because they're going to care less about your income. But in general, having a salary really does help. Now, you can use SA 302s, which are your tax returns on owning a business, but until you've got 2 years worth of SA 302s, you're really going to have an issue proving to lenders that you're mortgageable. So really what you're looking at is a minimum of a £25,000 salary. This isn't relevant to a residential mortgage, but for a buy-to-let mortgage specifically. Can you get it without earning £25,000? Yes, however, it will limit the amount of lenders available to you, and they may look for a guarantor to guarantee if you don't pay it. But to put yourself in the best standing, that £25,000 a year threshold is going to be really important. Age. Now, age is something you can't really control. It is literally changing every single second. But if you're under the age of 18, then you're going to cause some issues. Can you purchase? Yes, but again, it's going to limit the lenders and you are likely to need a guarantor. But there is also an upper age limit within reason. Something to bear in mind is a mortgage limit, or how long the term is of the mortgage, isn't dictated on when you purchase the property. It's actually dictated on when the mortgage ends. So if you're in your, say you're 60 years old and they are willing to lend up until 75, it doesn't mean you can borrow or get a mortgage out at the age of 75. What it means is when the mortgage term is coming to an end, it needs to end by the time you're 75. Unfortunately, you know, getting real with it, the older you are, the closer to you know, you get where I'm coming from. So if you're 60 and their limit is 75, they will allow you to have a 15-year mortgage. I know that's maybe what you don't want to hear, but I really want to be pragmatic, and it is what you need to know from this channel. So how much can I borrow? See, this is where it's really different from other mortgages. When you're purchasing a residential mortgage, it's all based on what you earn, right? But actually, from a buy-to-let perspective, it doesn't really matter as long as you hit that minimum threshold of 25 grand. Ideally, you've got a couple of other bits in there, a good credit rating, etc. But ultimately, it comes down to rental coverage. Now, what rental coverage is how much does your rent cover the mortgage? And this is going to be based on a safety blanket. So right now the interest rates are 0. Fuck all out there, so they're not really going to base it on that. Most lenders are going to base it on a 5% interest. For example, let's say you are borrowing £100,000 from somebody, not the purchase price, but the actual debt that they're going to give you is £100,000. They're going to work that out at 5%, which is £5,000, 5% of 100,000, £5,000. And then they're going to look for rental coverage. Usually, to be safe, you want to times that by 1.3. What that's going to give you is 30% rental coverage. So you do £5,000, times that and get 130%. So 30% of £5,000 is going to be 1,500. 10% is 500, times that by 3, 1,500. And add that to the original 5,000. You need to be getting an annual rent of £6,500 on an annual basis, which is roughly, I don't know, £600, give or take, per month. Make sure that your yearly rent is 130% of your interest at 5%, and that is known as rental coverage. Finally, I want to talk about a big question that I get out there. Do you need to own your personal residence? Now, I'm going to be real with you. If you own your own house and you're an owner-occupier, it really does eliminate a lot of conversations. I know this is kind of ridiculous. I think it's ridiculous anyway, because what does owning my own house have anything to do with owning investments? But it's a really hard mindset for basic lenders to get their head around, is how could you possibly be buying property before you own your own personal residence, right? It's a bit of a head mind screw up, I don't know. Do you need it? No. It does make it a lot easier, and you will be reduced to the amount of lending. But if it gives you any confidence, I actually own quite a bunch of property as buy-to-let properties in my businesses before I ever owned my first property myself as an owner-occupier. Can you do it? Absolutely. So there you have it, everything you need to be a successful property investor with regards to getting a buy-to-let mortgage. Now, hopefully you've listened to that and gone, I tick all of those boxes, but even if you're not, don't worry about it. Property is not a get-rich-quick game. It's about investing over a period of time. If you understand the fundamentals of what you need, draw them up as a checklist, tick them all off as you're going along, and try to tick them all off before applying for your first buy-to-let mortgage. My final recommendation would be get a great mortgage broker. Don't go directly to the bank. Get a broker that understands your personal situation and will understand the lenders that are most likely to give you that mortgage. Let me know in the comments of what you thought of this video. Let me know, do you tick on all of the boxes? Are there any outstanding that you know of? And if you got value from this video, make sure to destroy the like button, hit subscribe if you're new to the channel, and of course the notification bell, and I'll see you in the next video.